So welcome to the starting point of understanding some cryptocurrencies in a little bit more depth. Now, I could go on about Bitcoin very much at length in terms of like an overall course or a full section. This is brief, so please ensure that you do more research and ultimately understand a bit more. This is going to go through the obvious key points that you need to know before you start jumping in. Now, I believe a lot of other content creators are not discussing Bitcoin as they should be. I feel that a lot of new people in the space don't really want to buy Bitcoin because they feel that it's overvalued. I see that as I wouldn't say it's a bad thing, but ultimately Bitcoin is more of a wealth creation element. There's ways of creating wealth using Bitcoin. There's ways of using altcoins to ultimately get more Bitcoin, and you'll start to learn that throughout this course. Now, let's talk about the obvious. What is it, right? Designed to act as money, but in today's age, it's more like wealth. For me, I always say to people, have some Bitcoin. Just have a little bit. Just have some, because it's a good little portfolio stability kind of element. And it's a really easy thing to store. It's a really sensible storing point for a beginner. Bitcoin uses a Generation 1 blockchain. You've probably heard of a blockchain through the previous videos. But, as I say, people often laugh because it's very old, but the foundations of it is all about security. This is the biggest, most secure network on the entire planet, right? It was first introduced to the public in 2009 by Satoshi Nakamoto. That was when it went live. We will talk about the original origins very, very soon. It uses a proof of work mechanism, POW. Uses a lot of power. It's often targeted for that, and we will talk about it in a bit more detail, but it uses mining protocols to enable new Bitcoins to be released to the market and to verify and validate the blocks, okay? Bitcoin has had a huge rise to fame in the last 6 years. Massive, right? Everyone, in my opinion, knows about Bitcoin. If you ask anyone on the street, then they have an idea what it is, whether it's a good opinion or a bad opinion. It's by far the most dominant cryptocurrency on the market. Even in today's market, in a bear market right now, it's double, triple the amount of volume that Ethereum gets, okay? The starting point of it, okay, this is simple. It was first kind of like on the radar in August 2008. However, there was some little rumblings of certain elements, there was certain things like, I can't remember, it was Bitcash and stuff like that back in the day, like early on. There was all kinds of stuff around this cryptography kind of technology way into the 1990s, right? Not even in 2008. This was coming out during the economic bubble and the burst of the mortgage crisis, right? So the domain name was registered at that point. It was then announced on a massive cryptography mailing list. I've been working on a new electronic cash system that's fully peer-to-peer with no trusted third party. Now, that alludes to is no banks. No bank, kind of element of a handshake, which is where the problems lie. So if you think about sending money from a different country, it's a bit of a ball ache, right? This is where it all gets a bit interesting. On the 3rd of January in 2009, the first Bitcoin block was mined, the block 0. It's known as the Genesis block, right? The time is now, Chancellor on the brink, the second bailout for banks. That is a message that is contained within that block. As I said before, blockchains cannot be changed. They cannot go back in time. You cannot delete them. You cannot change the text. That is there for history now. The very first Bitcoin USD exchange rate was published on the new Liberty Standard on the 5th of October in 2009. You could get 1,309 BTC for $1. That is an incredible rate and price. Now, a lot of people will look at other cryptocurrencies and go, oh, it's just like buying Bitcoin of those days. Not everything is like Bitcoin. Bitcoin is unique in my opinion. There's a lot of altcoins out there that are relatively unique in terms of their use case, but this was unique. This was, one of the best generational kind of investments you're ever going to make if you were buying at those early days. The technology, mentioned it before, blockchain, the whole network to power it. Now, as I say, It's a generation 1 blockchain, so it can't do smart contracts. It's relatively cluggy, it's relatively slow, but it's unbelievably secure, right? Now, mentioned it before, previous bit, blockchain is a distributed ledger, that's a shared database, that stores data. It's public, you can view it, you can utilize it in any way, shape or form, right? When a transaction takes place on the blockchain, information from the previous block is copied to the new block with the new data encrypted, and this is all done via the miners. They're validating if you have money. Can you move that money from your wallet? Is it there? And can it go to that next wallet? Will it go? That is what they're doing, right? And what they're doing with this, and we'll go into it in more detail, they're getting rewarded for this. And this reward is a massive, massive factor in terms of why the price is so big and why the fundamentals of Bitcoin is so strong. Bitcoin uses SHA-256. It's an algorithm to encrypt the data stored within the blocks. Now you've got to remember it's encrypted data. And this is a massive hexadecimal kind of number that is utilized on every single block transaction. Huge. Now, talk about mining. Now, it isn't going digging. It is a series of supercomputers, right? Back in the day, people could have done this on a laptop, on a computer, on a machine. If you see anything that is telling you can mine Bitcoin and you get a slice of the profit, it is 100% a scam, okay? Want you to remember that, because when we go over scams at some point, it'll probably be mentioned there. There's a few things out there that claim to pay 2% per day. No. These are massive, massive warehouses, rigs on islands. They're freaking massive. It's a different game. So, how does it work in terms of transactions? This image kind of showcases it in a very, very simple, logical, cartoony way, right? So, say for example here, Alice wants to buy a product from Bob using Bitcoin. She basically opens up her wallet and sends over the money, but within that it's all done via encryption through private keys and stuff like that. We'll talk about those in more detail and security. But the transaction is then requested to be put into a block. These blocks are then built up, they're housed in on the network, and they're filled. Whenever the time limit goes, or whenever it gets filled, it then gets processed, and that's where it goes through the whole validation process. What the miners are doing is actually solving a very, very hard, complex sum to, decrypt it, basically, to send it through and to enable it all to go through smoothly, knowing that Alice has that money in her wallet to therefore send Bob. That is literally it, in boring details, right? However, it's a lot more complicated than that, and it also is very, very powerful, which we will come on to in more detail as to why that is. Now, security, this is a massive, massive factor of why Bitcoin is still here today, and I believe it will be here for many, many years to come. It is a monster, right? One can argue that BTC value is similar to that of metals like gold, right? Both are very limited in quantity and have a select use case. Bitcoin is online. Bitcoin can be sent without having, the weight of gold is ridiculous. Imagine having $1 billion in gold in weight. You need an aircraft for it. You need your pocket for this. It's ridiculous, right? Double spending. Mentioned it in a previous video about, the problem that you've got with networks and sending data. You cannot get a double Bitcoin. You cannot have a double spend problem. You also cannot get a 51% attack, technically, because of the power. The power and the cost to enable this to happen would be very, very hard. You've also got to think decentralization. The miners are computers are all around the globe, right? They all have a share of the network. They have to get them all going the right way or the wrong way against something or against a certain block to cause a bit of havoc. To do that would mean ruining their whole entire business. It won't happen. It's impossible to happen anyways in hindsight. When you look at it, it's never happened now. It probably won't happen ever because the network is that strong. If it was going to be vulnerable, it would have been at the early days of Bitcoin. It hasn't been. Bitcoin's value is a function due to its scarcity as well. The supply over time is getting diminished as well. The one factor that you've got here with Bitcoin is the halving cycles. We'll talk about that in more detail. But also lost Bitcoin, like I mentioned it before, if you send it to the wrong place. One big problem with all this kind of basics of a cryptocurrency, if you send it to another wallet, it's lost. It cannot be re-enabled, right? It's what the whole blockchain's for. So there's only so much Bitcoin out there in the world. If everyone wants it, it's going to increase the price. It's demand. And then you've got that tradable kind of element to it. And you've also got fractions of it. It's a it's a 9 decimal point kind of number. It's quite a big factor to it. So as you think of halving cycles, as you think of investors wanting it, as you think of more opportunities in the market and more altcoins to trade and the trading pairs you can get, it's very, very interesting to note that whatever the price of Bitcoin has been, keeps going up. It's a bit odd, right? And finally, the Bitcoin network has never been hacked. But one final thing regarding scarcity. There's only 21 million Bitcoin. That's the supply. In circulating supply, there's about 18 million. There's already 1 million locked up in Satoshi's wallet, and there's also probably about 3 to 4 million lost and not even able to get utilized again. So massive, massive factor. So let's talk about this in terms of security, right? The hash rate. This is a factor of essentially, simple terms, security. More miners on the network, more competition, more kind of validators on the network as well will make a big difference to the security. It's currently at all-time highs. It's a blue line we're looking for here. The market price is in US dollars there in the black, and it's at all-time highs. Now, it's incredibly strong right now for miners. Right now, there's no narrative to say that the miners are going to crash the network, because they're still getting paid, they're still doing the thing, and even though there's a massive energy crisis across Europe and across the world at the moment, there's a huge benefit of actually mining Bitcoin, right? This will probably come down at some point, but will it crash the network? Maybe, who knows? But the biggest thing is with the difficulty adjustment. This is in tune with the hash rate. Every 2 weeks this updates. It's a bit different. The more difficult it is, equals more power it will be utilized, right? So therefore, it's quite hard to mine Bitcoin at the moment because the difficulty adjustment's at all-time highs and the hash rate is at all-time highs. That would mean competition's high, and also the competition to actually solve the puzzle. Hugely gamified, right? Massive. So with that as a factor, it's interesting to note that maybe if the miners do decide, you know what, over this winter, over whatever time period I want to sell up, I want to just sell some of my Bitcoin, turn off the network for a bit, chill out and relax, have no worries for a bit, they can easily do it because there's so many miners online right now. The competition's high. There's a lot of interest in mining Bitcoin in the big institutional kind of side of it. So that is a big factor. In terms of the price of USD, you can see over the history how things have progressed. You can see little dips. You can see in June 2013, like early 2014, had a little bit of a dip. A big one. Big spike, big dip. Mount Gox crash. We also had the first proper big, massive, institutionalized, glamorous kind of bull market, which I got involved in back in 2016, which is a long time ago now, but that was absolutely unbelievable. The speed and the ferocity of that moving from when I entered this market to like where it went to was unbelievable. And then we've got obviously the other stuff in terms of the bear market into the next rally up to $69,000 pretty much, which is absolutely mental when you think about it, right? So halving, mentioned it a few times. This to me is a massive narrative, huge narrative in the market. This for me is the reason why we go up every single time. History tells us that, and it's interesting. So basically the halving is the reward for the miners. Started off at 50, now it's at 20, it went to 25, sorry. Then it went to 12.5. It's going to halve again to 6.25 in the next cycle in 2024. Every year before it starts to rally up, people get interest, people want to buy and accumulate Bitcoin because it's going to go scarce because less and less is going to come into the market. It's an interesting, element that every single time we go through a new halving cycle or into a new cycle alone, we tend to just bottom out a lot higher and also go up even higher in the previous, from the previous cycle, which is a massive, massive factor, right? Now, the value. Gold is currently worth approximately $11.8 trillion at the time of recording. Bitcoin was worth 1.3 trillion at the peak of the previous cycle. Now, for every cycle, as I mentioned, Bitcoin has gone higher than the previous, which is always interesting to note on scarcity, right? Now, because Bitcoin has multiple uses and can be used across borders with ease, unlike traditional markets, it's a massive, massive play. Gold has been around for so long, centuries upon centuries. We still don't know how much gold is on the planet as well. Gold can be really factored in with how much is actually found. If there's more found, it could affect the value. If there's less found, it may well also affect the value. With Bitcoin, it's written in code. It's not going to change. You've got 21 million as maximum supply. You've got the utility of it, and you've got the lost Bitcoins, and you've got all the other bits and pieces, right? But you've also got the entire market built upon it, built around it, built through it. So, huge factor that maybe the entire crypto market, which was worth at the time $3 trillion, could eclipse gold in the future, which is, in my opinion, pretty realistic if you're talking long term, if you're talking 10, 20 years time. Bitcoin is classed as a property in a lot of countries, certainly in Europe, certainly in the likes of Japan and stuff like that. Digital property, you know, you can declare it, you can pay tax on it, you can do all kinds of stuff with it. Pretty important, right? Now, the final bit that I want to go through is obviously recommended reading and listening. This is very, very brief, very, very brief, just to kind of whet your appetite a little bit. But there's a few things to watch and listen, or whatever, how you want to do it. If you're listening to audiobooks, I recommend the Bitcoin Standard. It's very much in depth about money, but ultimately it goes a lot deeper in terms of what Bitcoin is. This one is really, really good as well. It's relatively modern. It's around when the pandemic kind of happened, so this one's pretty up to date. You've also got this one as a narrative story of the introduction, the core elements of how cryptocurrency became what it is, certainly going through some massive stories. So this is about the Winklevoss twins in terms of their creation of Gemini and where they started. So it all goes about the start of Coinbase, likes of, you know, Charlie Shrem, you know, even likes of Eric Voorhees with Shapeshift, all these people right at the start, the underground of crypto. Really, really interesting. And the final bit is the obvious bit, is the Bitcoin white paper. Read it, understand it, look at it. It's a good read, and it understands a lot about how the market is going to go in the future if we are going to go peer-to-peer, and we may be looking at, you know, a little bit of an enhancement or overhaul of the traditional finance system.